Welcome to another episode of the Power Law Investor. Today is the 12th of March, 2025, a Wednesday. And today, what we're going to be talking about is Kaspa mining, clearing up some misconceptions around how it works. And then we'll be figuring out some first, second, and third order implications from that. And I think you'll find this very useful because I often hear from people saying, oh, the miners are going to set a floor to what the Casper price is going to be. And that is not completely true. There are some aspects of truth in that, but we need to take a more nuanced and deeper look at it. And at the end of this video, you'll have a much better idea how that is. Again, this is not financial advice. It's for informational purposes only. And as I'm making this video, Bitcoin is trading a little bit below 82,500, and Kaspa is just above 6.5 cents. Right. So we'll talk about Kaspa mining, the mining profitability, capital costs, what it tells us about the price floor, what are some second order implications in terms of network adjustments, and finally third order implications in terms of miner expectations or market expectations. So let's start off by having an understanding of what the, let's change this to today's price, what the Kaspa market, what the mining situation looks like in Kaspa. You have an overall total network capacity of 1.27 exahashes, and you can find that, well, here's 1.28, it's changed a little bit. And we are going to model this using the Bitmain Antminer Pro that has 21 terahashes per second of mining capacity. That's a measure of computations. And that produces roughly about 1,000th of 1% of the overall network hash rate capacity. For those of you that aren't really familiar with hash rates, the way that the Caspa network works is that you essentially have to solve these puzzles by plugging in a particular solution or a particular number. Whoever plugs in the right number ends up getting the mining reward. The mining reward right now is about 61 Caspa per block. So the block controls all the transaction, has all the transactions in it. So it records the transaction and you get a reward for mining that particular block that gets spread over the entire network, since there's no way to have either any one particular miner isn't going to be able to figure it out better than anyone else because the solutions are more or less at random. So you have 62 Caspa per second being generated here, 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 just distributed across the network, right? And then for miners, they're running these specialized computers and they have to pay for the cost of electricity. They get the CASP as a reward. They're paying for electricity. The difference is the profit that they make. Currently, the CASPA per emissions per block is 62 CASPA per second, and total emissions per month are 160 million. Right? You can find that out by going to any of the websites that talk about this and look at the emission schedule. And the important thing to realize about the emission schedule is right now we're over here, in this section over here, is that it drops down every month. It roughly drops down by about 6% every month. Okay. And that's where this number over here comes from, is this monthly adjustment factor. So today, if I were running the Antmain Miner Pro with its particular electricity usage and the amount of hash capacity it has and the overall hash network and the current Caspa price, I would be looking that I'd be making a monthly profit of about $71. My monthly revenue is $185 because I'd be making about 2,600 Caspa per month. I'm selling that at 7 cents a pop. I get $185 back in terms of revenue. My monthly electricity cost is 113 at a cost of 5 cents per kilowatt hour over here, which is a pretty good price, which typically the big miners like Mara and CleanSpark, if you look at their annual reports, you'll see that's roughly what they're paying for their electricity. So that would be a good electricity price for someone running one of these miners. And you're ending up with a profit of about $71.82. And you can go to many of the other websites around and get the same similar number over here. Here it's $65. In my calculations, it's about $71. So that's just a first level understanding of what's going on. And if you extract that out, the marginal cost, the cost that you're paying as a miner, how much it costs you to mine the Casper works out to be about 4.5 cents. So what that means is on a first level implication is that below 4.5 cents, it is cheaper for you to actually go ahead and buy the Caspa from the market than mine it yourself because your cost of production is 4.5 cents. So anything lower than that, I might as well buy it from the market. Why am I even running this thing, right? So that is what many people will talk about in terms of, oh, the Caspa floor is the mining, right? Or the Caspa, that's what sets the price of the base level over here. The Caspa price won't fall below this. And you get different estimates and you can plug in different costs of electricity. So if you plugged in a cost of electricity about 10 cents over here, you'll find that the marginal cost of production becomes 8.5 cents. And that's why you see a range of values over there. People will say it's 10 cents, it's 15 cents. 15 cents is on the high side, but the lowest that you can get with what the price of electricity that I've been able to find should be about this much, around 4.5 cents, right? And so that will make you think like, hey, well, the price of Caspa shouldn't drop below that. That's going to be a floor. But that's not strictly true. You have to understand things a little bit in a deeper level, right? So you've understood here that the mining profitability on the marginal cost of electricity alone, but the miner itself is not free. Right? If you look at the miner over here, this one costs $1,650, and when it was first introduced about a year ago, I think it was around somewhere between March and August. I've heard different things about that. It was almost $6,000, right? So the price was about 3 times higher than what it is now, 3.5 times higher than it is now. And that also has to be paid off because if you have the miner for free, yes, your cost is this. But if you have to pay back for the cost of the miner, you have to be making more. The price of Caspa has to be much more than this in order for you to be generating a profit, right? Because the cost has to be paid back. And so we can do some calculations on whether you actually end up making enough at this particular Caspa price at 7 cents, whether you can actually pay back the miner. And the short answer is that you don't. If you start looking at your profit on a monthly basis, you'll find that the monthly revenue starts dropping down because the monthly adjustment drops down by 6% every month, which means it's 185 this month, then it's 174, then it's 163, but your electric cost remains the same. So your monthly profit is going down, it's going down, it's going down, but you never make enough money overall. That's this cumulative profit to get to the point where you can pay off the $1,650 or $1,700, as I've indicated over here. Right, let's just highlight that too, so it's easier to find. So that makes, I hope you guys understand the point over here, that it doesn't make rational sense for someone to be actually going ahead and buying the miner if they don't think that they'll be able to pay it off. But there is a subtle nuance here, something to understand, that once I've bought the miner, my cost for the miner is a sunk cost. I already paid that. So I'm going to keep on running the miner even as long as my cost, as long as the price in the market is higher than the cost it cost me to mine this, right? So once I've got the machine, I've already paid for the machine. I'm screwed. If I'm out of whatever it's going to be, 1,600 bucks, I'm out of 1,600 bucks, but I want to minimize that as much as possible. So I want to be running it unless the cost of making any mine or mining any Caspa is is so small that it's not even worthwhile for me to turn the machine on. Okay. So the decision for someone to buy a miner is quite different from the decision to run a miner once you already have it. Okay. So once you already have it, you just care about the cost of electricity. What if you've already paid for it, too bad. You're screwed if you're not, you want to reduce the amount of how much you've been screwed as much as possible. On the other hand, if you're bringing new capacity into the network, it depends not only your expectations on what you think the price is going to be now, but also what you think the price is going to be in the future. Let's just look at the first one there. What is the price going to be now, right? So if you're looking at a price of 7 cents and you look at, hey, what is my return on investment going to be for this? You actually have a negative return on investment. Over 3 years, you end up with minus 177%. And it's more than 100% because I've assumed here that you just keep on running the machine regardless, even if you're making a profit or not. But basically, you'd lose 100% of your money because you never make enough money to pay back the cost of the miner. You're always going to be in some sort of debt, right? So the value of the miner to pay off, this column over here, column K, it never gets to zero because you always have to pay off more and more and more. Okay, so that doesn't make any sense in that particular situation. But the important thing to realize is once you actually have it, then you're going to be running it as long as the cost of running it is less than the cost of selling the Kaspa, right? So the price floor over here is not 4.5 cents, right? And I'll explain that in a sense. But to bring new capacity onto the network, that cost is going to be quite higher. The price, the expectation that you have for the Casper price as a rational miner will have to be quite a lot, right? And so if you think about the Casper price, what would it have to be for you to make a reasonable amount of money, right? Let's say if you wanted to make a reasonable amount of money means you make about 20% per year, right? So if you look at 20%, let's just plug in 20 cents over here, and then you see, okay, over 3 years, you'll be making an annualized return of about 30%, which is pretty decent. And or every year you'll be making, sorry, about 30%, but over 3 years you'd be making 125% return on investment, which is pretty good. Another way of thinking about this is like, hey, how soon can you pay off the cost of the miner in 1 year? Typically, you want to pay it off completely. So what value will make the zero? And you can go about, let's say, maybe about 16 cents or so. Maybe that's about right. So you can go even lower than that, 0.15. So that means by about October 2025, you can see that the value of this miner to pay off ends up becoming a negative number past that month. So you're paying that off pretty quickly. And after that, you're just making profit, and your lifetime profits over there are can be, are non-zero, right? So over the course of the year, you'd want the average price to be about 15 cents, just based on that. Right now, it's about 6 cents. So if you want an average of 15, you need it to be balanced by 20 some cents, 25 cents later on in the year, right? If you're trying to balance it out. That's just a rough order of magnitude calculation, but it gives you an idea. That's what the kind of expectation you need to have if you're going to be running or going to buy this miners, right? And so what we've noticed here in terms of the hash rate over here, that the hash rate seems to have plateaued. And the reason it's plateaued is because not a lot of new mining capacity is coming online, partly because miners are doing this exact same calculation and saying like, hey, at 7 cents, I'm never going to be able to pay this off. So why would I be bringing in more network capacity on? If my expectations change, if I thought there was a lot more money, that a lot higher price that I'd be getting for Caspa, then I know I'd be making some money over here. I'm making 31% a year, which is pretty decent. So then in that case, I'll go ahead and buy the miner, and the network capacity and the hash rate will go up ahead. It also gets a little more complicated because it's not just my expectation now. There is a lead time between when I make the decision and my miner gets delivered. So what we see in terms of the hash rate being added to the network is the collective perceptions of the market X many months of lead time before. So if the hash rate comes online in January, I've probably had to make the buying decision sometime in October, maybe November, depending how long it takes to get some of these delivered. So it gets more subtle on that. But then you think, okay, well, 4.5 cents, that's going to be the absolute minimum, right? What's going to happen? But at below that, the Caspa price won't go below that because no one will be selling. The miners will refuse to sell. Assuming that the miners are the only people selling, and that's not a really solid assumption, let's say we plug into this 3 cents over here, right? My marginal cost is about 4.5 cents, and every month I'm now making negative money. Okay, so I'm losing money, so I stop running the capacity. So at this point, does the network shut down? Do I refuse to sell it? What goes on? Well, this is where the really interesting subtlety comes in, is that the hash rate will start dropping because it's not profitable for a bunch of these miners to actually go ahead and produce or mine the Caspa, right? But then the total network hash rate over here will also go down. So instead of 1.27 exahashes, let's make it 100 exahash, or let's make it 1 exahash. At this time, because now the overall capacity of the network has gone down and I'm still running my miner, I now have a bigger fractional capacity of the network over here, right? That means I control a bigger section of the network, which means I get more of the percentage rewards. So my marginal cost goes down because I'm getting more Caspa accumulating to me. So at that point, I am still not making more of a profit, but if you reduce this down even further, let's call this to 8, my marginal cost goes down even lower, and then I become profitable, right? So as the overall number of participants in the network go down, and that's a proxy for overall hash rate, as a simplification, the people who do remain in the network end up making more, getting more rewards because they control a bigger section of the market, right? And so even at 3 cents, you're still going to have miners that are going to be there. Now, for some of you, this is stuff that you've already thought about and understand, but for many of us, are not familiar with this sort of argument. And so this argument of saying like, oh, the marginal capacity here is at the marginal cost of production is going to be the price floor for Caspa. That's not accurate. The network will dynamically readjust. Okay. And so based on that, you know that this is not going to provide a floor for you. It's a lot more subtle than that. So there are people who've made the buying decisions, already have the miners in their possession. They're going to be running it until their mining capacity, until their cost of production drops is above the cost of buying it in the market. But then some of them will go offline. The other ones that do stay online will start making more because the overall network hash rate has gone down. So they're getting a bigger percentage, right? So it becomes a little more complicated than just that. So all this can seem really confusing. And the core part that I want you guys to understand is that it's not so simple as saying that that the cost of production for miners is something that's going to be a floor, right? Because the network will dynamically adjust. And we haven't even included how much the network grows per month over here, right? So it can grow up at a particular amount, like it was earlier on in the Caspa's history. The network capacity was growing, and so then you have the capacity growing, so your particular proportion of the network that is owned by one particular miner ends up becoming smaller over time. So you have to keep on reinvesting and buying in new miners, right? So the mining is a difficult business to be in. But I do want to leave you guys with one particular piece of insight that is quite interesting, which is that if you're looking at the current cost of the miner at 1700 bucks, let's assume someone is actually buying it. It's not, there's a cost of making the miners, but someone is buying these miners also. Let's assume that 1700 is a reasonable amount, right? So if people are buying it at 1700 and it's a reasonable investment decision, what does that tell us about these people's expectations about buying the miners, right? And so mining capacity is going down right now, but let's assume that if I were to buy a miner, what would be my expectation? What would the people who are making the miners uh, have to be selling it at so that the people who are buying it can make a reasonable profit? And by this calculator, you can reverse engineer that, which is really interesting, right? So let's say it's 20 cents. At 20 cents, you're walking away with a 30% return on investment. You're paying it off in basically in 4 or 5 months' time, right? And so if I was the rational miner, I would say at most I'm willing to pay about I want to pay it off in a year's time, right? So let's say I think the number works out to be about like 17 cents, maybe a little bit more, maybe less than that. So let's say it's 16 cents, right? So my expectations for the price of Caspa over the entire history of the mining that I'm going to be using it for a 3-year lifespan is going to be at least 16 cents, right? Let's just call that, right? which means that now if it is trading at 6 cents or 7 cents, then my expectation is that it is going to be trading at a much higher value than that 16 cents at some later time point. Okay, so maybe about 25 cents or 30 cents. So by reverse engineering the price at which it's selling right now, and assuming that the limiting price is the cost that people are willing to pay, and there's a secondary market and everything is is balanced in equilibrium, lots of assumptions, you can get an idea what the market expectations are for people who are likely going to be the smartest players around. Not saying that I'm the smartest, but have done some of these calculations. And so the expectation is that the lifetime value is going to be at least 16 cents, right? At least 16 cents, which means that the average is going to be 16 cents, which means you got to be exceeding than you got to be more than the average front. You got to have more than the average because right now you're below than the average, right? So that means there are a number of rational players in the market that have expectations that the price is probably north of about 20, 25 cents, right? And the price action has been pretty horrible of late. It has gone up quite a bit over the last couple of days, but you look at Kaspa, and we're still in this sort of region over here. You know, you've seen how much we've dropped all the way from 11 cents all the way to 6.5, 5.5 cents. So if these are the expectations that the miners have, then that's going to be another point of interest that you can put in your tool shed of examining, on your toolkit of examining, hey, what is the overall market dynamics going to be? And again, I have to caveat this that that would be for new entrants coming into the market, right? If you're already in the market, and if you're already in the market, if it's really going to determine whether you're going to buy into the market or not. And then the hash rate capacity is dropping down. So there's a bunch of these miners that aren't being coming online, right? So you got to hold that as a caveat. But it does give you at least some rough estimate, another point of um, faith that you're not the only one who thinks that the Casper price is going to be significantly higher in the future. So I hope this was interesting to you guys. I know it seems very nerdy, but the implications here are quite interesting, particularly in terms of market expectations. Now, I hope you guys will put down in the comments any questions that you have, and we can take the discussion further. Please don't forget to like and subscribe and share the channel with your friends and other people who might be interested in Caspa. Thanks a lot, and see you on the next one. Cheers.